Hello, everyone. I'm Matt Clark, research analyst with Money and Markets, here with your Bull and the Bear podcast. If you haven't already, make sure you are subscribed to our YouTube channel. This is where we're going to find a lot of great features with Chief Investment Strategist Adam O'Dell, Green Zone Fortunes co-editor Charles Sizemore, and myself each and every week. Also, check out moneyandmarkets.com. This is your home for safe, sound, smart, simple, profitable investment information for your portfolio. You can set up your own watch list of stocks. You can use our Green Zone ratings, proprietary Green Zone rating system to track and look at the ratings for any of those stocks, break it down by metrics. You can see financial data. You can also see stock charts, anything we've written about it. All that is available at moneyandmarkets.com. I'd also be remiss if I didn't mention Green Zone Fortunes. This is where Adam, Charles, myself, and our entire team work very hard to give you the best in-depth analysis, research, and stock recommendations that we think are going to beat the market by at least 3 times over the next 12 months. We'll put a link up top here so you can find out more about Green Zone Fortunes. Now, let's move on with today's podcast. It can be a kind of a scary time to be an investor right now. If you scan financial news, you're going to see that markets have really been taking a beating over the last 12 months, since the start of 2022, basically. Just in brief looking, the Dow Jones Industrial Average is down about 9.7%. The S&P 500 is off by almost 12%, and the NASDAQ Composite has dropped by 18%. But now is not really the time to panic buy or panic sell. We've talked about this before. And in fact, Green Zone Fortunes co-editor Charles Sizemore and I recently said in a YouTube video that now is the time to be tactical as an investor. And being tactical in times of market volatility means you want to seek out assets that are going to retain or even increase their value when the market is turbulent. These are better known as safe havens. In this episode, I'm going to go compare 2 of the biggest safe haven assets on the market today, and I'm going to share with you where I think your safe haven assets should be right now. Now, one of the most common moves investors make when the broader markets tumble is to rotate into these safe havens. These are instruments and investments that are expected to retain or even increase their value in times of market volatility. For decades, gold has been one of the predominant safe havens for investors. However, over the last 5 years, there's been a new player in the safe haven game, and that's cryptocurrencies. This is because cryptocurrencies aren't really linked to any macroeconomic factors, or they're tied to the central currency. And as markets have turned down over the last several weeks, the argument over Bitcoin versus gold as a safe haven has become more relevant in our discussion. Now, traditionally, when the stock market turns volatile, the price of gold will go up because investors are taking money out of stocks and buying gold. And evidence of this is in a chart showing the price of gold. While gold is up 19% in the last 12 months, it's made a remarkable 14% rise in just the last 2 months. This is when the markets have been the most volatile. As of this recording, gold prices surpassed the $2,000 mark for the first time in a year. The same can't be said about the popular cryptocurrency Bitcoin. Bitcoin reached a high of about $67,000 in November of 2021. But since then, the value of the cryptocurrency has actually dropped 38%, even when markets were more volatile. Now, crypto prices have bounced up a bit more after news of an executive order from President Joe Biden was released earlier this week. The order asked the federal government to look at the risks and the benefits of cryptocurrency, including consumer protection, illegal activity, climate change, because it does take a lot of energy to mine some cryptos, including Bitcoin, giving the U.S. a competitive edge in crypto development, and exploring the development of a central bank currency. You can think of this like a digital dollar. China's already done this already with a digital yuan. And now this executive order is pushing the government to look at ways of possibly creating their own digital dollar. And crypto investors seem to welcome this order as Bitcoin prices surged past $42,000 on optimism. But now there's one other metric we can use here to help settle the argument of Bitcoin versus gold. The Bitcoin gold ratio measures the amount of gold it would take to buy just one Bitcoin. And when the ratio is higher, Bitcoin is considered to be stronger than gold. When it's lower, it's exactly the opposite. Currently, the ratio is about 21. Meaning it takes about 21 ounces of gold to buy one Bitcoin at current prices. That's the lowest the ratio has been since August of 2021. And it means that gold has gained strength on Bitcoin. Now, in all, I think there's room for cryptos to be a viable investment. Once they become more widely accepted as payment, they'll become stronger. It'll also potentially smooth out a lot of the volatility we see in cryptos today. If you look at a price chart for Bitcoin, Ethereum, Solana, any of those, you see there's a lot of ups and downs. There's not really anything in the way of smooth movement. It's very volatile. And I think once it becomes more widely accepted as payment and more widely used on the general market, then I think you're going to see a little bit more smoothing out of that, which would make Bitcoin and other cryptos more viable to be used as investments. But as a safe haven, considering today's market conditions, just today's market conditions, gold should still be the safe haven of choice. Now, again, I'm not against cryptocurrencies as investments, and I think there is value to be had there. I've recommended cryptos before, and I think there's a lot of strength to be had there. But factoring all the data and just using today's current market conditions, gold is really still your best bet. Now, that leads me to last week's YouTube poll question. What we did is we asked our viewers if any cryptocurrency could become the next gold. The results are pretty even, which was a little surprising. 35% of those who voted said that cryptos would not be the next gold anytime soon, but they did have strong potential for them being a decentralized asset rather. Now, 31% said Bitcoin was already on its way to becoming the next gold, and 29% said that cryptos were still very speculative, which is all very true. I don't know that if Bitcoin plans on has potential to be the next gold per se, but I do think there is a lot of potential for them being a decentralized asset, and I do think that they are very speculative as of right now. So a lot of truth there in what our viewers think. And we also asked viewers to give their thoughts on the question. Matt, which is not me, said nothing's going to replace gold. It could store a value alongside gold, but it won't replace it. And then Julia added, I don't believe the human race has changed, so gold will remain number one. Thank you to everyone who took part in our weekly poll. Remember, you can vote in these weekly polls on our YouTube page under the community tab. Just head over to YouTube, search in Money and Markets if you're not there already. Look under the community tab. We usually post that poll up on Thursdays or Fridays. You can find out and vote and comment as you like. If you have a question or a particular stock or sector that you'd like either myself, Adam, or Charles to take a look at, we would love to do that. You can email us. The email address you can reach us at is feedback@moneyandmarkets.com. We'll drop that right down below. Feedback@moneyandmarkets.com, or you can comment below on our YouTube page if you're watching this as a video. We love to look at any of your feedback, so make sure you comment. And if you do send in a question and we do use it, we're going to send you some very cool Money and Markets gear for free for your efforts, like this shirt here. Not obviously this one that I'm wearing, but we also have hats, sweatshirts, and a lot of other stuff that we'll send out to you, all for participating with us on YouTube and on the podcast. Also, head over to moneymarkets.com, sign up for our free daily e-letter. We give you safe, sound, smart, simple, profitable investment information for your portfolio 7 days a week, sent to your inbox for free. And while you're there, you can check out our proprietary green zone rating system. Use it to get the metrics, use our metrics to get ratings of thousands of stocks out there. We break it down by 6 metrics that we use, give it an overall rating. You can also see fundamental data. You can see information about the company. You can see the stock chart. You can see anything that we've written about. It is all right there at your fingertips, and you can do it for free. Just go to the homepage at moneymarkets.com. There's a top little search bar, type in any ticker or company, and you can pull down all of its information that we have available. So use it often. Start a watch list if you like. You can do all that for free at Money and Markets. That's all for me this week. Until next time, this is Money and Markets research analyst and host of The Bull and the Bear, Matt Clark, wishing everyone safe trading.